non-current assets. All right. Okay. Can you hear me?
Yes.
Okay. So for IAS 16, revaluation is simply termed as, suppose you have bought a land years ago, 10 years before. Okay. Let's say 10 years before, you have bought that land for $10,000. Okay. So 10 years from now, the land cost $100,000, right? So the 90,000 increase in the cost of the land is a profit for you, right? And that is called as a revaluation gain. Understood? And this is the revalued amount. Clear? So when you adopt a revaluation method, what you would basically do is the asset which was given for $10,000 now would be valued under 100,000 as carrying value. Understood? So in a nutshell, using the revalued amount in the big books of accounts as the assets carrying value is called as the revaluation model of IAS 16. Understood? And it totally depends upon the company to select either a revaluation model or a cost model. Okay, so based upon the accountant's professional judgment, he is going to decide whether or not a certain particular asset should be revalued under revaluation model or should it be taken under cost model. Let's understood. Just an example, if your business is dealing with fashion industry or anything as such sort, all the assets needs to be replaced as and when the new technology arises, right? Okay, so at that time it would be plausible for you to choose a revaluation model because you could get a correct value of your assets at that stage. Okay, or if you are dealing with a real estate business, okay, your business is real estate, then showing the assets at cost is useless, right? Okay, because the assets keeps on changing its value, the properties keeps on changing its value. So at that point of time, it is better for you to opt for revaluation model than using cost model. Understood? So it basically depends upon the company and the professional judgment of the accountant on how to choose the valuation model. Understood? Clear? So what does IAS 16 say? If an asset's carrying amount is increased as a result of revaluation, the increase shall be recognized in other comprehensive income and accumulated in equity under the heading revaluation surplus. Now, long before when we started off with the FA, I have told you about formats, right? So under the format, you have studied SOPL format, right? Just below the SOPL format, you have written something like OCI. Remember, other comprehensive income. So at that time, I have told you that whatever comes under the SOPL contents becomes the realized version, and whatever comes under OCI becomes the unrealized version. Understood? To simply put, you know that your asset is being increased in value by how much? Just a moment. Okay, so the asset is revalued by how much? 100,000, right?
Yes.
Okay, but this particular revaluation that you got for 90,000 is not given to you directly. You don't have that in cash, right?
Yes.
Because unless you sell off the asset, you don't get it in cash. So that is an unrealized item. Understood? So unrealized items goes to OCI. Clear, no? Understood, Kim? So that OCI content should also be taken in SOFP, right? So in SOFP, we create a particular income balance called as the revaluation surplus, where we take all of these revaluation gain under equity. Clear, no? In SOFP. Understood? Okay? And we'll discuss it further later on. Okay? Now let's see this question. I'll be explaining to you. Don't write. Just follow me, and then when I give you time, you can write it down. Clear? So let's see. Vanguard company owns a land which originally cost 250,000. No depreciation. Now we know that on land there is no depreciation according to IAS 16, right?
Yeah.
So there is no depreciation. Vanguard company wishes to revalue the land to reflect its current market value. So revaluation simply converts the assets value to its current market value, which is known as fair value. Clear? So 350,000. So at cost, you bought the asset for how much? 250,000, right? And then the fair value becomes how much? 350,000. So you say this as that is carrying value at fair value. Clear? How much was it for? 350,000. Clear? So what is the gain that you got? Revaluation gain is how much? How much? 100,000. Clear? So when you prepare the extract of SOPL, in the SOPL extract under OCI, you get revaluation gain of how much? 100,000. Clear? In SOFP, under assets, under PPE, you have got how much now? 350,000, because it should be taken under fair value. Clear? Since I don't have place here, I am going to write it here. And then under equity, you're going to have revaluation surplus of how much? 100,000. Clear, no?
100,000.
Okay, do this. Clear, no? After that, do illustration 2 as well with the depreciation. Or else I'll do it for you. Okay?